Kitco News Outlook 2024 is brought to you by iTrustCapital. Buy and sell crypto, gold, and silver with your IRA.
Hey everyone, I'm Jeremy Szafron, and this is Kitco News. Now, as 2023 draws to a close, we're going to be taking a deep dive into the lithium market. It's a battery metal, of course, and a critical component in powering the electric vehicle revolution. Although this year, it's been a roller coaster for the lithium industry. We had dramatic shifts in market dynamics. Remember how lithium companies were all the rage in the stock market back in 2022? I mean, Albemarle Corporation, for instance, saw its stock prices skyrocket to $293. And of course, this was driven by the booming demand in the electric vehicle sector. However, 2023 brought a little bit of a different scenario, with ALB stock adjusting to around $140, mirroring the changing tides in the market. Similarly, north of the border, Patriot Battery Metals out of Canada, it was peaking around $17. It's now trading below $10. This really is showcasing the volatility and the rapid changes in the lithium sector. But today, we're going to be speaking with Andrew Miller. He's the COO of Benchmark Minerals Intelligence to gain insights into the lithium market as we look towards 2024. Andrew, thanks for being on the show with us today for our Outlook.
Thanks for having me, Jeremy.
Of course, I want to jump into this because, 2023 has been a year of divergence in the lithium market. And despite the increasing demand from the EV sector and renewable energy initiatives, we witness an oversupply, and this leading to a sharp decline in lithium prices. This has posed profitability challenges for major lithium mining companies, and it's indicating a shift in market sentiment and strategy. So, Andrew, provide us a little bit of an overview of the lithium market this year. Explain what happened.
Yes, I think if you look at the lithium industry in 2023, you really have to take it in the context of where this market's been and where it's going. So if you think about lithium even 5-10 years ago, we were much more familiar with prices, in and around the $10 per kg mark. Now, what you saw over the course of last year was a massive inflation in those prices, a huge scramble to source material, and fundamentally that pushed prices up to unprecedented rates that nobody really could have foreseen. So 2023 has undoubtedly been the year of a correction. There had to be a correction in that price, so it isn't sustainable, and there was no fundamental reason why prices were ever at the China spot level that we saw in the 80s, 90s over the course of last year. So that correction was inevitable. I think what's taken some people by surprise, though, is the rate of that correction and where prices are appearing to stabilize towards the end of the year, which is in and around the $17, $18 mark. So a massive correction from those highs of, on average globally last year, we were seeing somewhere in and around more like the $60 to $70 range. So that's a huge correction, of course. It's made the profitability for some companies challenging, but I think fundamentally it really speaks to how quickly this industry is being asked to scale, that we're going to go through this incredibly bumpy journey as lithium scales to meet EV ambitions over the next decade.
Now, let's talk a little bit about the global landscape. Obviously, China is a key player in the lithium market, and it experienced a significant drop in lithium carbonate prices. And this was largely due to reductions in government incentives for EVs, the new purchases of which, and apparently an uptick in lithium supply. This led to, as you mentioned, a huge decrease in prices. So, Andrew, how do you see this impacting the global lithium markets in the future here as we look towards 2024?
China is the key player in the lithium industry, undoubtedly. It holds the keys to unlocking chemical supply, where it has a huge amount of chemical conversion capacity domestically. More importantly, in 2023, what we really saw was some of the demand side effect of the Chinese market, where we saw, as you mentioned, some slight correction in the EV growth of Chinese market, which has been central to global EV adoption to date. On top of that, you also had, with that scramble to source material prices skyrocketing throughout 2022, what you actually saw was quite a bit of inventory build throughout the supply chain. And it took a few months earlier in the year for that to really feed through. So you've had that downside to pressure on the demand side. China has also been able to scale some of its own domestic supplies of raw material or mining of lithium, where it hasn't actually been a major player. That predominantly comes from Australia, comes from South America, but China has been increasing its efforts to do more domestically. It may not have the best assets, but it has been able to source lithium some higher cost parts of the industry, particularly when prices are where they were in 2022. Now, interestingly, there's a lot of correction as the price comes down. Some of that material is not proving to be sustainable longer term, but it shows the dynamics and the key role that China can really play, both as a swing supplier for the industry, but also in terms of still guiding the demand narrative around electric vehicles.
Yeah, interesting. I want to get onto the R&D topic about what we're seeing in battery technologies, but I'm curious before we do that, what is your outlook for lithium in 2024? What's the price target? Where do you see this going?
Yeah, well, really, the thing of it is about lithium and the price to sustain new supply to come industry is that we are going to need much higher price levels than we've seen historically in the lithium market. So that's something that consumers of the material are coming to terms with. They're working a lot more strategically with their lithium supply to make sure that they can access the more economical sources of lithium. But realistically, if you think about how fast the industry is being on scale, we are going to have to see higher prices go, at some point next year to really continue to see the flow of capital into the lithium industry that the market needs longer term. So there's the longer term, the shorter term direction, and obviously consumers enjoying the lower price environment. But different to what we've seen in other price cycles is actually consumers taking a more strategic position in lithium, looking at the price of where it is now and realizing that they are going to need to incentivize that new production in the longer term for this to take place. So I think we're going to have to see a continued amount of correction in the lithium industry over the years, over the course of this year. But I think in the second half of the year, you will see a more positive price environment.
So Andrew, let's talk a little bit about that price target. I mean, what's a sustainable price target for lithium to be for a company to then be profitable in the industry?
Well, realistically, if you look at where the cost curve is shaping up and you look at a lot of the developers in the pipeline, I think realistically you're going to need prices in the high 20s to really sustain some of these new sources of production. So when you look at the new technology development that needs to be put in place to extract lithium from these new sources, all of that comes with increased risk, of course, in terms of timelines, but feasibly to bring that type of material to production, and most importantly, to convert it to something the battery industry use in terms of a battery grade chemical, you are going to need prices to rebound to some extent. Now, that's not to say that we need to be looking in the 70s, 80s that we saw in 2022. As I mentioned before, that's not sustainable for the battery industry, but certainly we need prices higher than the low to mid teens, which is where they were when they started this price cycle. So we do think, like I say, in the end of next year, you'll see a more positive price environment, but that's not to say that we're going to see prices massively spike again as we saw in 2020.
Yeah, you teased a little bit about new technologies, and I'm curious about this. With the ongoing R&D, the research and development inside of battery technologies, what are the emerging trends? Or is there any breakthroughs expected in 2024 that could possibly change the dynamics for lithium here?
In 2022, we're really still talking about the core group of technologies that are going to be deployed in electric vehicles. I think if you look a little bit further afield, and the big question for the lithium industry today is more so about where can we displace lithium-ion batteries with other types of battery storage. So lithium-ion batteries are, of course, going to be the mainstay of the electric vehicle market, of portable electronics, because they have those the lightweight characteristics which allow you to move the battery from point A to point B. But there are other markets for lithium-ion batteries, stationary applications, where you don't necessarily need that lightweight characteristic. And with the volatility that we've seen around, whether it be raw material pricing in lithium-ion batteries, or just actually the availability of high-quality lithium-ion batteries in the market, all of that has made a tussle really deploy new types of battery technology that don't use lithium. Now, these aren't going to displace a huge amount of the lithium market. The vast majority of growth of energy storage is really going to come from those portable devices like electric vehicles, like your phones, your tablets, your laptops. But beyond that, if you look at the deployment of lithium in some of the more stationary applications, I think those are the parts of the market that are being thrown into question with some of these volatile dynamics along the supply chain.
Interesting. Are there any significant lithium mining projects expected to come online this year? And could that affect supply dynamics here?
So a lot of the new supply we're expecting to come into the market over the course of 2024 is really going to be incremental new tonnages. You're, of course, seeing more expansion from spodumene operations in Australia. You've seen the introduction of some new supplies from Africa, which are new to the market. But if you convert some of those raw material units that are being extracted from some of those areas of the world, and you convert again to how much battery grade chemical that equates to, we are seeing that incremental tonnages come on in Africa, in parts of South America, but nothing that's really going to throw the market into a massive surplus. And in our models, we really see that between now and the second decade, the market is going to be pretty finely balanced. And that's where, what we saw in 2023 really managed to knock things into a bit of a surplus, where some of the over expectations of EV demand in 2023 meant that we had a bit of excess capacity on the supply side. That isn't a huge surplus in the market, though. And I think people need to be aware that although we've had this price correction, that doesn't mean that we have a huge amount of available supply in the industry. We still need to scale, and we still need to introduce new assets over the course of 24.
Yeah, interesting. I mean, you talk about different governments. We know how important the industry is in terms of electric vehicles when it comes to things like incentives. So I'm curious, how could changes in government policies and incentives, particularly in key markets like the EU, the US, and China, how's this going to influence the market in 2024 here?
Yeah, well, they really play a critical role on two levels. On the demand side of things, of course, is geopolitics and the policy side of things, which is really setting the tone for where EV adoption rates are going to be. We, of course, have the major OEMs that have put in place their plans. That's all now being backed up by government support and policy. Secondarily to that, and where you're not sort of seeing this so much in all parts of the world, but certainly in Europe and in North America, is some of the criteria being around how you source that material and where you source that material from. And really what that's doing, and it has already begun, to really reshape the supply routes for lithium into the battery industry. And I think that's something that you're going to see as an increasing trend over the next few years, whereby North American consumers are looking at how they can source the vast majority of their material, or the most they possibly can, from within their borders or from free trade agreement partners. Similarly, you see the Critical Raw Materials Act in Europe targeting the accessibility of these raw materials and being able to reshape exactly where we source some of these critical minerals and metals from. So that will be a big trend, I think, across the whole battery supply chain over 2024 and beyond.
Interesting. Yeah, another interesting aspect of the lithium industry is the strategic investments and collaborations shaping the market. I mean, for instance, the movement of Australian companies investing heavily in Canadian lithium, it almost indicates a strategic shift towards diversifying global lithium sources. So how do you see a trend of consolidation in the sector, particularly among junior companies struggling to access capital?
I think there's absolutely the potential for consolidation, but I still think we're actually going to need to expand the basis of assets that we have under development. If you think about how many new mines are going to be needed to sustain EV targets by 2030 and beyond, we're still not quite there in terms of feasibly having access to materials. So I think the partnerships and collaborations that you mentioned really speak to leveraging the skill sets of different parts of the world to make this happen quicker than it is at the moment. You see Australian companies lending their mining expertise to projects in the US or to projects in parts of Europe, parts of the world that maybe don't have a strong mining infrastructure as Australia or Canada. So I think those types of collaborations across industry, across countries, but also across industries is going to play a really significant role. And that's where you see the major automakers now actually reaching further upstream than they've ever done before, taking stakes in lithium assets, looking and being more strategic about how they invest money in a raw material level to sustain some of these downstream ambitions. So collaborations with partners are going to be key, and whether that's geographically or by industry, I think both of those, push things in the right direction.
Yeah, I know. Obviously, we don't have a crystal ball here, but as we look forward and look ahead to 2024, what are some potential disruptions that could really affect or shape the lithium market this year?
Yeah, well, I think again, the biggest question mark at the moment is the demand trajectory. I think a lot of people were expecting more growth out of the EV market in 2023, and perhaps the macroeconomic environment and some of the sentiment around the global economy is making people question where the automotive sector will go in 2024 as well. So the EV market is, of course, the leading driver of the lithium industry. That will play a significant role in market balance and ultimately where prices go into the new year. But I think we really need to look as well, from a longer term perspective in terms of where some of these and the development timeline for some of these new assets and new technologies that play a significant part. I think that will have a defining what happens in 2024 and 2025 will really define what happens in the global market come 2030 and beyond. We need to start laying the foundations for that raw material expansion, which we know is in the horizon. But if we get distracted by some of the short-term sentiment around the industry, the risk is that the capital just isn't deployed quick enough to make those expansions a reality.
Yeah, and it almost seems as though the retail market has been a little bit shy of coming in and investing here. And speaking about that, we get asked from insiders and from investors all the time. I'm curious what advice you would give them when we look towards lithium in 2024.
Well, I think we really have to take lithium as a long-term play, right? There is a huge demand trajectory that the industry is faced with. And so I would look at, companies, we always say, look at the companies that are doing the right work early on, putting in the experienced teams, that are building in the right type of infrastructure and building up the collaborations that will sustain production, whether the market is up or down. The lithium industry going from a niche chemical market to a much larger scale commodity industry is going to experience huge volatility over the next few years. And at times where, like this year, you're going to see the market tail off a little bit. But I think you really have to look at which companies are laying the foundations for that longer term growth in the market. In our view, those are the companies that are going to be more sustainable and be there to reap the rewards when the market's on an upward curve, which will inevitably come. So I think look at the leadership teams, look at the types of assets, look at the credibility of the technology that's being deployed to extract the material from those assets. And finally, it helps to have good partnerships. I think that's what a lot of lithium companies have done incredibly well over the past few years, is establish partnerships, whether that's with customers who are going to be buying your material at the end of the day, whether it's with technology providers who allow you to operate more efficiently, or whether it's with governments to make sure that you can speed up that permitting process and hopefully bring these mines into operation that bit quicker. All of those are going to be really strategically important in defining the success at a company level over the years to come.
Yeah, interesting. Any bullish companies specifically that you're looking towards here that you think should be making some interesting moves on this upcoming year?
Well, we're independent of benchmarks, so I can't recommend any company specifically, but I think it's well documented, who are the companies that are the leaders in this space. Lithium isn't a big industry today, but you can see their expansion plans playing out. I think it's been really encouraging to see their continued push and the deployment of new technologies from some of those incumbent producers. And then when you look beyond that, to your point earlier about diversification, that is the name of the game in lithium today, is diversifying supplies, is bringing more secure and sustainable supply to parts of the world that are going to be major consuming regions. So I think you do have to look, some of the activity here in North America, look at what's happening in Europe, or which parts of the world will be supplying that European market, and those ones to watch, over the months and years to come.
Andrew Miller, thanks for joining us today. Fascinating industry, no doubt. And of course, this upcoming 2024 is just a small part of what's about to come. So thanks for joining us.
Thanks, Jeremy.
And thanks again, of course, to our viewers for tuning in. This has been a comprehensive look at the lithium market as we conclude 2023. And don't forget to subscribe to our YouTube channel for more insightful content, and download our app for more information. I'm Jeremy Szafron, and we'll see you next time.
Kitco News Outlook 2024 is brought to you by iTrustCapital. Buy and sell crypto, gold, and silver with your IRA.